Hey traders, welcome to a crypto market update. We're going to be going over the price action of mainly BTC, looking at the large-term timeframes, working our way down to the 4-hour and the 1-hour charts. But like always, we'll start off with the large-term timeframes. Starting off with the weekly here, we see that the price of BTC is around $9,700. It has basically hit and held this key level of resistance for the past couple weeks now, where we initially hit it at the start of May, and then we're just consolidating in that rectangular zone that we'll talk about basically for this entire month. So first thing, let's first look at some of the weekly candlesticks that are appearing right here, kind of looking at the structure of them, looking at the wicks, trying to understand the battle between the buyers and sellers. So we see a massive wick here, and what do wicks indicate? They indicate that there is either buy or sell pressure coming into the market, because within these wicks, what happens when you actually see a wick? You see the price come all the way up to a certain level, and then within that same time frame or that time horizon, you have the opposite push come in and drive the price to where it initially opened. So the price went up, bulls initially had control over the market, but then the sellers inevitably pushed the price right back down and basically closed very close to where it opened. It actually closed below the open in that particular candle. So that's basically what we're looking for wicks, and we see a wick right here indicating that there's lots of buy pressure. You see wicks right here. So that's what you're looking for. You see massive wicks to the downside at this zone. So within the recent price action on the weekly chart, I did see a nice wick at this key level of resistance or supply, which is also in confluence with our horizontal zone. You see that there was a key level of resistance right here, around 10K. That's going to be where the next key level of resistance is that we're currently just holding below. Let's say that's at 10.5, so 10,000 to around 10.5. Looking on the long-term time frame zone, it's not going to be an exact price point, but I personally do see a horizontal level of supply as well as a descending level of supply as well. So I'm definitely still a little bit hesitant on entering longs just because of that fact. I do think that we'll have some level of a spill, because if we do break this level of an ascending trend line, we're just basically bouncing from resistance to support, It's obviously not going to be a perfect straight line, but in terms of where we currently are right now, the risk reward that I see that's more favorable would be a potential move to the downside, because the risk for the potential move to the upside would have to be pretty small, and the reward would be breaking out of a major level of a supply, which in my opinion is just not ready yet. I think we'll have to have some level of a wind up if we do come back down, and then we'll get some level of a consolidation phase. That would be a good opportunity for us to look for a continuation pattern. But in terms of a potential, just a massive move, I just do not think this is ready yet. But if the price does actually move to the upside, breaking the 10K, especially when it breaks the horizontal zone right here, 10.4 around there, that is when I will shift my bias and call this large symmetrical triangle a breakout. So you never know what's going to happen in the market. There's nothing is a guarantee in life. But in terms of when I will have to shift my bias in order to call this a potential bullish breakout like we saw in 2016 for the rise of 2017, I think I would be calling it a breakout if we do break this very significant level for Bitcoin. But if we do see the price hold this area and we don't see the price break this key level of resistance, I am going to expect some level of sell pressure to push the price back down, maybe to the mid-range zone of 7600, and then we may see some wicks all the way to 62, 63. We don't exactly know, but that's the long-term price action of BTC. We're in a nice tight consolidation here right at a resistance zone. I'm a little bit hesitant on entering long because of the key level of supply that we're still currently holding below. It just makes sense for me to have a risk reward that makes more sense to the downside right now, and then if we do pop up above that zone, that risk reward is going to be significantly skewed to the upside, where we have a solid risk reward potential, where you have a very small amount of risk for, in my opinion, a huge reward that could be coming for the appreciation of BTC. And that's basically the weekly chart that we're going to go on here. Not a whole lot more that we're going to discuss. We will discuss the miners a little bit later in the video. But just in terms of simple price action on the weekly chart, that's what I'm gauging. There's a little bit of sell pressure coming in. I do expect some sell pressure to come back in. Don't know how far we will drop. We do have a very significant mid-range zone splitting this symmetrical triangle at around $7,700. That's going to be the major zone for me to be looking at within this pair. All right, now let's look at a smaller time frame. That was a weekly. Let's now go into the daily time frame on Coinbase. So we can see that major level of both resistance and support. Let's get our snip. Gonna get a little bit of coffee and then we'll dive into the price action on the daily here. All right, so like the weekly, we have our major level of resistance and major level of support, as we can see at the bottom there. So I've drawn two major ascending trend lines and one minor just to connect the middle, because I do like to kind of know what the middle looks like. And we can see these are the two trend lines right here. This is my first trend line that I drew, which initially connected the higher highs for my wedge formation. And then I also have another trend line, which is connecting the higher lows, anchor point right here, first touch, second, third, fourth, and we can just connect those lows like so. So that's going to be my first trend line that I want to see the price break if we're going to get any sort of sell pressure coming into the market. Oh, sorry, not that one. This is the first trend line that I do want to see the price break in order for me to get any validation that we could get some sell pressure in the market. And then the confirmation where I'm really going to be looking for a potential move to the downside is if we break this less ascending trend line, which was a previous key level of resistance, which is now going to be a new level of support. Now, in my opinion, both trend lines are in confluence with the key horizontal level of support that I see at around $8,600 right around here. We saw that that was a massive support that held when we got that initial sell-off at 10K, and we held and it rallied right back up to almost test that high. So we know that there's a lot of buyers within this zone, and since the start of May, everyone who has bought Bitcoin is up at that zone or higher. So if we break that zone, every single person who's bought in May is now going to be in red, which is definitely a psychological challenge for any people who are, in weak hands, don't really understand the market, or just are unwilling to hold out this little bit of a drawdown. So that's basically my consolidation right now. Is the price is currently in this little square we see within this consolidation. If we break to the upside, that would break the market structure. So I'd be really looking for this horizontal zone like we talked about at around 10.4, 10.5-ish. But if we do break above this zone, I'm going to be looking at the price action pretty bullish, because that would mean a potential break in the large term symmetrical triangle we talked about on the weekly time frame. That would be an extremely bullish opportunity to be entering long if we get a continuation to the upside, because this is a large term macro bullish pattern in my personal view. So that's the move for the upside. You're looking for some level of a consolidation where you're going to get a volume accumulation phase somewhere in there, possibly, where you're going to get some solid volume accumulation within the historic volume, as well as nice tight consolidation where you're going to be potentially able to enter before that massive move to the upside. And then in another situation, if it just absolutely moons and then consolidates, you might want to be averaging in, dollar cost averaging. In the case of it does pulling back, you can enter significant more here. But like we saw in the last previous bullish push right here, we had that nice $4,200 level of resistance. Maybe it was 43, around 42.50. Remember, it was right around here back in 2018, started 2019. And then once we got that massive move to the upside, a lot of people were calling that solid retest back up to around 5K or 4,500, somewhere around there, and it never happened. So retests are not guaranteed, and if we see the price hold on a large time frame like the daily, 6-hour, 12-hour, with a move that really significantly pushes the price up, that's kind of going to be my game plan, where I am going to slowly add in, and if it does retest this zone, I will be looking to add more because that is an extremely bullish move. Although I will be looking for a large candlestick to hold above this zone. I'm not looking for a 15 or a 5-minute candlestick. I'm looking at large term time frames in order to validate that there's buyers not even pushing the price up, but holding it up. That's the main thing. A lot of people can just push the price up quickly, but it's the confidence from the buyers that's able to hold the price at a certain zone, because it takes a lot more than one individual to hold the price in this large market. So that's going to be the kind of large term daily, weekly time frame. Like I said, not really going to be looking to enter within this structure. Let's zoom in a little bit and then get a new snip. So what I currently see is sell pressure within this zone right here and buy pressure within this zone right here. So we're kind of in a consolidation sideways, and I don't really love that. In consolidations, if you're looking at it very simply, you want it to be selling at resistances and buying at support. So that could be a way to go about trading this market right now. I personally am holding off until I see a little bit more of a momentum move in a direction that I find favorable and that I find having an edge in. Right now, I'm a little bit leaning towards more of a bearish indication, but at this very moment, I'm pretty unbiased. There still is a high correlation between Bitcoin and the traditional markets like the S&P and Dow Jones. So very similar situation where you saw a significant rally that was aggressive, moving to the upside, and now you're seeing a consolidation. And I think if we do see a move back down to kind of the bearish momentum for the traditional markets, I wouldn't be surprised if BTC saw that as well. Also, because of the fact that miners are still getting squeezed, we did see a move down in the hash rate around 5%, meaning that miners have left the network. There is less people mining because with less people mining, the difficulty reduces. When more people mine, the difficulty increases. This is the perfect world that Satoshi has created. The difficulty adjustment is pretty unbelievable to kind of understand, because it's like a self-correcting mechanism that is pretty unbelievable. But anyways, we'll get into that a little bit later. But in short, yeah, I see a major supply zone there, and I'm going to stick at this kind of zone that we see a major level of supply, major level of demand, and I'm just waiting for the price to kind of break out of this zone. I don't really find the need to be trading this small range. It still could provide some good opportunities in terms of percentages. It's a 10% from high to low, but I just find it very noisy in my personal belief. And because the price has been on an absolute roar, and the global macro sense does tend to give a lot more bullish sentiment towards BTC, because it's a hard asset with a fixed supply where any central entity cannot print unlimited amounts of it, especially when not just the United States, but all central banks, or most central banks, are printing a tremendous amount of money. It's extremely, extremely bullish for BTC. So let's quickly look at some economic indicator here, looking at the money supply around the world, because I just touched on it right now, but I do think that it is a pretty important thing to understand how much money is actually being printed around the world. So let's first look at this massive list here. We did touch on it on the global macro update, but it does provide some fundamental reasons that cryptocurrency, or at least Bitcoin, should go up. It's not just these independent countries that you think are suffering from inflation or hyperinflation, like Venezuela and Zimbabwe. If we look right here, Venezuela has, first off, let's look at this chart. What is this? This is the money supply by country. So this is the amount of change in the money supply for the last 3 months and the last 12 months. And this is the latest data we can see from Venezuela, Zimbabwe. So first place on the list, Venezuela. America is not first place on a list. And their change in the last 12 months for the money supply is almost at 2,000%. In the last 3 months, it's over 85% change. Unbelievable. Absolutely unbelievable. But this is the reality for Venezuela. Zimbabwe is not as aggressive, but still, you're seeing almost 50% increase in money supply in 3 months. Now, these numbers may sound unbelievable to you, but look who's not far down the list. We see USA, Turkey's currency is absolutely getting destroyed. Let's actually look at that after this chart. But America, we see that in the last 3 months, America has increased its money supply over 12%. Let's quickly look at the money or the monetary base, the money supply in the United States. This is that 12% in 3 months. Let's look how absurd this move is. That is that percentage of the United States. 12% change in the last 3 months. In the last 12 months, it's almost going 20%. So if you're thinking that these numbers are just, far away countries that will never happen to first world G20, G7 countries, it's very mistaken. United States is printing a lot of money. But what's different about the United States versus countries that are printing a lot of money as well is that there's a huge demand for the United States dollar. They're a world reserve currency. If you're selling anything in the world that's a commodity, by the way, money is a commodity as well, but if you're selling anything like gold, silver, coffee, oil, cryptocurrencies, you're mostly going to be selling for US dollars. Almost all transactions and commodities are settled in US dollars. The most traded fiat currency in the world is the US dollar, so it's in the highest demand. So if you're printing a lot of it, there's still demand coming in trying to buy up that currency. But when you have a currency that is less traded, less desired, like, for example, let's look at like Turkey is absolutely in the shitter in terms of the rate at its holding its value. It's debasing extremely fast, and we'll look at the currency of Turkey, the Turkish lira, very shortly here. But we can see the 3-month change is not that much different from America. We see these faraway countries that are in hyperinflation at 87 and almost 50%. But Turkey's only 17% in the last 3 months, whereas the United States is 12. So it's not that far off in terms of how much money they're printing. And if we look at South Africa, the South Africa Rand, it's only 6.83, and they have a lower increase in the money supply change in the last 12 months than America does. But South Africa is debasing their currency, and their currency is devaluing so much quicker than the United States. And this is the privilege that the United States has for the status of the world reserve currency. So let's shift things a little bit to the Forex markets. Obviously, this is a cryptocurrency related update, but I think this does pertain well because understanding fiat currencies will give a lot of light as to the potential destruction of them, because when you're looking at the Forex markets, you're only comparing one shit currency to another, and that's why you're seeing, when you're comparing one shit currency like the US dollar to Bitcoin, you're seeing massive price appreciation, because Bitcoin could remain absolutely stationary. There could be zero value add for Bitcoin, and you could still see it appreciate exponentially, because the actual comparison versus how many dollars it takes to buy that 1 unit of BTC is dropping because of debasement. So let's now look at Turkey, the Turkish lira, and the South African rand, because of the change in 3 months in terms of the money supply and the change in 12 months. Mind you, the South African rand is not that different from the United States. It's actually less. Quick shift. Not going to go too far into it, but let's look at initially the Turkish lira. So this is the Turkish lira on the weekly chart. This is unbelievable, right? So this is the basic capitulation of the Turkish lira compared to the United States dollar. It is devaluing more and more and more. Now it costs I believe 7 liras to buy $1 US, but I don't know the exact exchange unit of currency, but we can see the comparison versus US dollar versus Turkish lira is exponentially growing higher and higher. The inflation, the amount of money in circulation is not that different, but you see how much it is losing value compared to the US dollar. Very similar when you are looking at the South African rand. Similar situation, this is the weekly chart. Massive moves to the upside where you're seeing huge loss of value for the South African rand compared to the US dollar. So yeah, it's just charts speak louder than words, is my personal belief, and that's just a chart that really says a lot in my personal view. So let's just switch that over there, and then let's go back to the price action at BTC. Just wanted to get a little bit of fundamentals, a little bit of global macro in there, because cryptocurrencies definitely is entwined with the global macro that we are seeing shifting very quickly in the market. So now that we've talked about the large term kind of global macro aspect of cryptocurrencies, let's dive into the smaller term time frame. We've already talked about the daily and weekly. Now let's look at this 6 hour, 4 hour, and I think we're going to close it at that. We do have a 1 hour chart, although I'm not really looking at the market in an extremely bullish or bearish sense because of the consolidation sideways. I think we still could see a significant move up here because of the momentum really driving the price up, but we will end off the video talking about the miners and the squeeze that they are still currently in. So let's now take a picture of this and then just discuss this for a little bit. We have two trend lines like we talked about before. We have our ascending zone that was our previous resistance, which is now our support. It was a resistance for here, and now it's support again. Pretty well respected in my personal view, so I'm going to stick that right in there, which is now a nice level of support that we currently see within the small term time frame. Now looking at the next level of support, we see an anchor point right here. Rejection, 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 rejection. Our next level of support. So we see two ascending supports here, creating a potential level of demand, as well as our first level of support and our major level of support, which is going to be right here. Once this $8,500 level passes, I think we will see some sell pressure try to push the price down and a little bit of confidence lost from the bulls. That's going to be the main zone. I think if we don't get below this area, and if we just see candle closures with wicks, and then we see candle closures with wicks, and then we see some momentum, I think we might not actually get down below that zone. But if we are able to actually drop below this key level of support, I think we could see some momentum come to the downside, where we have a key level of support at 77, and then if we break this zone, I think we could maybe even test that major level of ascending support. We don't exactly know, but we're just taking it day by day. I don't know if we're going to go all the way back down, but I wouldn't be surprised if we try to push back down, because right now we're kind of in a pinball where we could see a little bit of momentum still continuing sideways before we get that massive breakout, because we have to remember on the large term time frame, we are just pinballing from resistance to support, and we're currently at a resistance. Wouldn't be surprising if we break this trend to now try to push back down to a main level of support. That's going to be the large term time frame that we're looking at. We'll see how it starts to react if it does carry a little bit of bearish momentum to the downside, because if we have anything like this, we have some nice price action patterns that we could play out as if we are looking for a continuation. But right now, it's just not, in my opinion, an opportunity that you'd be looking for a short, because you'd be kind of jumping in front of a train, in my personal belief. You don't really see any market structure that is moving to the downside. You don't see any price action pattern that is giving you a huge edge into a potential move to the downside, and you see no momentum shorting at all. Shorts are getting absolutely demolished time and time again. But in that said, I personally do not want to long, because there's a major level of supply there. And if it breaks it, yeah, I might be missing a little bit, but I do not mind. I'd rather miss a little bit and have a higher dependability, higher confidence and conviction that I will have a profitable trade. So that's my personal belief. That's going to be what I'm going to be doing for the next little bit in the cryptocurrency market. And then this is just the 4 hour and 2 hour chart. We do see a nice, this ascending trend line was this resistance right here that turned into a new level of support. So currently I do see some level of an ascending triangle pattern where you see a main level of supply at around just under $10,000. And you do see a series of higher lows connected connected by an ascending trend line. Obviously, you did see a validation of this zone. And we're just making these slow higher highs here. We're holding nice levels of support. We got a nice little wedge there that broke to the upside, hitting its kind of target of the high right there. And now we're holding a previous level of support that we held at around 95.60. So that's the TA analysis. I'm mainly sticking to the 4 and 6 hour just because, like I said before, I'm waiting for this consolidation to end. I personally do not think I have enough of an edge to trade this particular consolidation because of the fact that we could just easily move up and my stop loss could get hit on this short, and that would just be a trade I do not need to take. I'd rather wait for the break and wait for the confirmation where you get a validation of a previous resistance turning into new level of support on the large term time frame. Then is when I will want to be looking for a long, and then a short I'd want to see some momentum come to the downside, giving me an indication that there is sell pressure trying to push the price down. So at this point in time, we're in a consolidation, we're sideways. I'm just not really looking to enter in the market. You don't have to be entering every single day. I am looking at other assets, I am looking at other trades, and I'm already in other trades in different asset classes. So that's kind of the benefit of trading multi-asset portfolio management in some sense. But there are always downsides with having to look at more charts, having to try to understand more markets and all that stuff. But yeah, I'm at this point in time a little bit hesitant to be entering this market. But that is just personally my opinion. Quick look at BTC dominance shown on this chart right here. Let's first look at this weekly. So we had a massive drop in BTC dominance at the start of 2017 when we had that massive bull run. And since that huge move down, since the peak of around 2018, BTC dominance has been increasing. We see a nice continuation pattern with a descending triangle with a huge move to the upside. And now we're getting an expanding price action pattern that has, in my opinion, recently broke a descending resistance zone. You see an anchor point right here, and this is a support, so that should be green. And then you see a little midpoint here, and then it broke a major level of resistance we see right here. Let's just take a nice picture on the daily, looking at the dominance of Bitcoin. This is going to give you an understanding of if you should be looking at alts or not, because if BTC dominance is increasing, the amount of money in the cryptocurrency market is funneling into the most liquid, the most, I would say not stable, but the longest historic successful cryptocurrency in the entire cryptocurrency market. Nothing has stood as long as BTC because Bitcoin was the first cryptocurrency ever invented, right? So it's had the most dominant, most liquidity, and if you're going to be safe in the crypto markets, you're going to be looking at larger cap coins like BTC. So it's definitely important to understand Bitcoin dominance. And we see that we have a resistance, and now it does look like we are testing this previous descending zone as well as this resistance horizontally as a new level of support potentially. If that is the case, we could see a move back up, which would be more bearish for the alts. It could mean that BTC is absolutely going to boom to the upside and alts are going to remain kind of stationary, or we could see a massive sell-off where alts are absolutely plummeting and Bitcoin is remaining a little bit more stable compared to the alts. That could kind of be the two indications that we could see if we see BTC dominance increasing as well. But as of right now, we're just consolidating above the zone, although it does look like it's in a place where we could see a move up in Bitcoin dominance. Just something to note. If we do get a move back down, we do see this long-term ascending level of support connected by these higher lows. We did get a break if we just move it like this, but I'm going to keep it mainly as a, let's just get a projection, because obviously it's not going to be absolutely perfect. So I'm going to be looking at this zone as a pretty major level of support that if we do break, we could see a run on the alts. And this is a good indication if we do start to see something like this, where you see a capitulation of the Bitcoin dominance starting to fall to the downside. This is when alts will absolutely rise, and you should be looking in some more speculative investments in the cryptocurrency space. But when you see Bitcoin dominance rise, I think it's a really good indication that we should be going away from alts and into BTC, because it just makes logical sense. Now we're going to finish off the Bitcoin or cryptocurrency market update with a little bit of information on the BTC difficulty adjustment that is coming, which will then in fact affect the cost to mine Bitcoin, which is mainly the electrical cost to actually mine Bitcoin. So I'm going to get a little bit of coffee and then we'll talk about that very shortly. Oh, good stuff. All right. Now let's look at first the difficulty adjustment that's going to be occurring in about 9 hours, and date to next difficulty in around 9 hours. This is the BTC.com statistics for the network, and the next difficulty is estimated to drop around 5.64%, which means that there are less miners in the network. If there are more miners in the network, this number is going to be increasing because more and more miners are going to be on the network, and the hash rate increases as more people mine BTC. And this creates that squeeze, that miner capitulation squeeze that we're talking about, where as long as new miners are entering the network, it's going to cost more and more to mine Bitcoin. And if Bitcoin price is appreciating, not a problem. Things can work completely fine. There can be more and more miners entering the network without any issue because everything is going up. You can continuously get higher and higher revenue, which then will provide you enough of a profit or a revenue stream to pay for your expenses, which is a rising energy bill, and then you'll still have profit left over because of appreciating price of Bitcoin. But let's say Bitcoin consolidates sideways or goes down. The cost of mining Bitcoin still continues to rise. So you're getting a squeeze where your revenue is consolidating or going down because your revenues is a direct reflection of the profits that you sell from your Bitcoins that you mine. But if the revenue is going down and the cost is going up, that is obviously a squeeze that is going to affect miners. So we see right now the difficulty is decreasing, meaning miners have gone out of the network. So we should see the cost of Bitcoin to the cost to mine Bitcoin lowered. So it's in about 9 hours. So let's look at the current cost to mine Bitcoin on average around the globe. So we can see this chart right here is representing two things. First thing is going to be the total cost to mine one Bitcoin, which is going to be around, let's say, just over $15,000 US. This is on average around the globe. This isn't on one single miner who's able to receive extremely low energy because of a subsidy or something. Like this is global average worldwide. So it's not one random Chinese manufacturer who's able to get super cheap energy. It is, like I said, on average. And let's look at what happened in the last halving, because that's obviously pretty important, and it will play as a factor for why we think that it could go down in the short term, along with the price action. Looking on that long-term symmetrical triangle that we have been in for a while here. So let's go back all the way to the last halving. So this was our last halving. We did get a significant move up. Pre-halving was like 80%, but we can see right here, this was the exact date of the previous halving. Instantly, the price of the cost to mine one Bitcoin rose from $348 to around $720 to mine one Bitcoin. And your expenses increase dramatically, right? But the cost of one Bitcoin, the price of one Bitcoin remained relatively stable. And this is where the mining capitulation comes in, because you see a lot of miners are in the red, meaning that they are unprofitable. They can't make money. Initially, this is the 12-hour chart. What do you see after the halving? Let's just take our snip and just discuss what we can see right here. So you see that after the halving, in the first difficulty adjustment, which is right here, each one of these little upticks is going to be a difficulty adjustment. You see difficulty adjustments happen every 14 days or 2 weeks on average. So So the first difficulty adjustment, what did you get? You saw a move to the downside. This is a similar difficulty adjustment we see right now, where you see a move to the downside because miners are unable to profitably mine Bitcoin in the network, basically, and you see it move to the downside, and then you see it consolidate a little bit more. This is the potential miner capitulation we are talking about. Once you start to see any momentum to the downside, where you're starting to see a significant move, you know a lot of miners are already struggling. So if the asset that they're holding that they're expecting to sell to pay their debts is decreasing, they're going to just sell it all there and then because they're anticipating it going down even further. So that's going to create a potential very aggressive quick sell-off like we saw right here. So we're looking for these difficulty adjustments to go substantially lower, because when you have a major difficulty adjustment like we saw right here, where you saw a huge move in the difficulty, meaning a huge decrease in the cost to mine Bitcoin, this is when the mining capitulation has occurred. And we haven't seen that yet. We haven't seen a massive decrease in the difficulty to mine Bitcoin, because in order for that to happen, you need a massive decrease in the hash rate. And in order to have a massive decrease in the hash rate, you need to have people leave the mining network. That is the chain domino effect that we're wanting to have. So that is kind of the end result that we're looking for as a potential in our thesis. And that said, once that takes place, what happens, right? Once that miner capitulation moment takes place, what happens? What do we see? First thing, the cost of the price of Bitcoin is now higher than the cost to mine Bitcoin. That's great for the miners. Two, when you're in this phase, a lot of inefficient miners are leaving. They have a high cost to mine Bitcoin. So a lot of these inefficient businesses leave the market because they can't compete. And then what happens to the same pool of BTC? Because there's only a certain amount of BTC that gets rewarded to the miners. So there are, let's say, two groups of people. Right, there's the inefficient miners who are in the network, and very efficient miners who are in the network. And there's a single pool of BTC that gets rewarded to both miners, both efficient and non-efficient miners. So during a bull run, during situations like this where you don't get miner capitulation, both parties receive the reward, which makes sense. But in difficult times, when you get miner capitulation, these inefficient miners leave the network. So they go, oh shit, I can't make any more money, I have to leave. So what happens after? These people leave, these inefficient miners leave. This same pool of Bitcoin now gets distributed only to the most efficient miners. And if they're able to hold during this, if they're able to hold during the worst market environments, of course they're going to be able to hold when Bitcoin's going up. So the supply that is getting introduced into the market is now reduced, because initially when there was inefficient miners, they had to dump more Bitcoin into the market because they have to pay, they have to sell more Bitcoin to pay for the energy. But if only the most efficient miners are in the market, you're not going to have that much sell pressure. That sell pressure is going to vanish, which then create a massive demand supply skew where you're going to have a huge price appreciation. So that is my thesis. That is the overall structure that I'm playing with Bitcoin. That's why I think it would be beneficial to have this, because in the long term, you will have a culling of inefficient miners driving the rewards of BTC into the most efficient miners, providing the best environment in the network for BTC to appreciate significantly. Accompany that with the fundamental global macro factors of central banks printing shit tons of money, seeing the proliferation of fiat currencies. This is the perfect environment in the ecosystem for Bitcoin. So in that said, obviously I'm extremely bullish on Bitcoin, but I want to see Bitcoin sell off a little bit more because of that fundamental factor. And we can see the cost to mine Bitcoin is absolutely astonishing. And that's kind of why I wanted to see a sell-off. And we will be able to see this adjustment in around 9 hours, where you're going to see this little tick. We see that there were ticks. Let's get our little arrow. We see that there are ticks right here, right here, right here, right here, right here. These are difficulty adjustments, right? This is when the cost to mine 1 Bitcoin changes because the difficulty adjusts every 14 days. And we're going to see the next one adjust in around 9 hours, and it's supposed to go down. So we'll see how far it goes down. It's only supposed to go down 5.5%. So we'll see how it does, and we'll see how the price reacts to that fundamental shift in the network. So that's going to be my kind of fundamental side of the network. And then if we go to the daily, we will see the difficulty ribbon come into play after it loads, which is just going to show you kind of the moving averages for the hash rate or the difficulty to mine BTC. We saw that in the previous capitulation, a lot of the hash rate difficulty went down. We can see that right here. That was the previous capitulation, which then led to the emergence of the massive bullish push we had in 2019 because of the lack of supply in the network. That's what I'm talking about, right? It creates these great opportunities where BTC can flourish because there's a limited amount of supply coming into the network. We haven't seen that. When we had that massive sell-off in March, where we had that 50% drop in a day, we didn't see any of the hash rate drop. We didn't see a lot of miners leave the network because it was such a quick recovery that these miners were able to turn back the machines right away and start mining. That's why you didn't see a lot of the difficulty go to the downside. It kind of remained stationary through that sell-off. So that's personally my belief as to why we think and we should and we kind of need to have another sell-off to cull the inefficient miners to provide a really, really good setup fundamentally, which will drive the price appreciation of Bitcoin to new highs, breaking this major level of a structure around 12K. So that's going to be my crypto market update. Hopefully you enjoyed it. It was a little bit of a longer duration in terms of the recording, but a lot of good information, I thought. If you have any questions, if you have any comments, if you thought that this was informational and you'd just like to explain your 2 cents, definitely comment in the comment section below. We like to engage, talk about, markets, obviously, absolutely love it. But, yeah, hopefully you enjoyed it. If you found this useful, entertaining, educational, it'd be great if you would subscribe to our channel. It helps us out greatly, and you'll be able to get more information like this on an ongoing basis. We also do a global macro update as well, looking at more detail into the economics of the United States, looking at more of the fundamental factors that may play a role in the reasons as to why investors around the globe want to look at gold and silver and cryptocurrencies as a form of an investment due to the proliferation of fiat currencies. So that's going to be my video for today. Thank you very much for watching. We really hope you had a great weekend, and hopefully you have a great trading week. So thanks for watching, and until next time, have a good one.